about finance. So let's come. I will talk about it and we learn about it. Okay, come with me. So firstly we go to Google and we search what is country finance. Firstly we search what is finance. We have come lots of websites and in websites have lots of articles, but we go to authentic website and we have a lots of definitions in about finance. So here we go the what does finance mean, its history, types and importance, all the things about finance we have. So we read what is finance. Finance is term for matters regarding the management, creation and study of money and investments. It involves the use of credit and debit, securities and investment to finance current projects using future income flows. Because of these temporal aspects, finance is closely linked to the and other related topics. Finance can broadly divided into three categories: public finance, corporate finance, personal finance. There are many other specific categories such as behavioral finance, which seeks to identify the cognitive, example, emotional, social, and psychological reasons behind financial decisions. So, finance, the system or study of creating, circulating, and managing money. Understanding finance. Finance is typically broken down into three broad categories: public finance, corporate finance, and personal finance. Public finance includes tax systems, government expenditures, budget procedures, stabilization policy, and instruments, debt issues, and other government concerns. Corporate finance involves managing assets, liabilities, revenues, and debit for a business. Personal finance defines all financial decisions and activities of an individual or household, including budgeting, insurance, mortgage, planning, saving, and retirement planning. Key finance terms. There are some key finance terms you should be familiar with. Asset. An asset is something of value such as cash, real estate, or property. A business may have current assets or fixed assets. Liability. A liability is a financial obligation such as debit liabilities can be current or long term. Balance sheet. A balance sheet is a document that shows a company asset and its liabilities. Subtract the liabilities from the assets to see the firm's net worth. So we go to cash flow. Cash flow is the movement of money into and out of a business or household. Compound interest. Unlike simple interest, which is interest added to the principal, one-time compound interest is calculated and added periodically. This results in interest being charged not only on the principal but also on the interest already accrued. Equity. Equity means ownership. Stocks are called equities because each share represents a portion of ownership.
Leo कलर ना है दांतों
वो तो होगा वही रखा वो.
दो ये सुबह
Liquidity refers how easily an asset can be converted to cash. For example, real estate is not a very liquid investment because it can take weeks or months to sell. Profit is the money left over after expenses. A profit and loss statement shows how much a business has earned or lost for a particular period. History of finance. Finance is a study of theory and practice distinct from the field of economics arose in the 1940s and 1950s with the work of Harry Markowitz, William Sharp, Fisher Black, and Maron Skoll, to name just a few. Particular real of finance, such as banking, lending, and investing. Of course, money itself have been around since the dawn of civilization in some form of or another. The financial transactions of the early Sumerians were formalized in the Babylonian code of Hammurabi. Circa this set of rules regulated ownership or mental of land, employment, or agriculture and direct credits. Here, there we are loans back then, and yes, interest was charged on the assets varied depending on whether you were borrowing grain or silver. So we got some